Your financial education is important, and you should take a moment to pat yourself on the back for taking the time and effort to reach your financial goals. My name is Dr. Stock, and in today's video, we'll be talking about institutional investors and what makes up institutional investors. I know a lot of the times over the news, we hear institutional investors a lot, and it tends to be a little confusing, especially if you're a new learner when it comes to the stock market. And so in this video, I'll be pretty much be breaking down what the institutional investors are, who they are, and where do they put their money. And so that's a important thing too. So the categories that make up institutional investors are countries and states, large primary financial institutions, financial asset managers, global corporations, private institutions, and retail investors. And I'll be discussing kind of where all this money moves globally. So and each category has more in-depth information to it. So I'll be going through that and making sure you guys pretty much understand what's going on. So for countries and states, so they control federal pension funds, social security funds, and welfare funds, and also retirement funds. And a lot of the times in those funds, they control hundreds and hundreds and hundreds of billions of dollars. So for instance, Japanese has about $2 trillion in their federal pension plan. And so for countries and states, they're looking for a safe way to invest that money and also grow it safely. So that money that's in the pension plans are owed to people, and owed to a lot of people. So they're trying to not only secure it, but also get the maximum return on that kind of money. So for state pension plans, retirement, and welfare funds, I'm pretty sure you guys have heard of the CalPERS pension plan, which is in California. And in that pension plan, it has about $400 billion. All that money is just for a pension plan. So, there's a lot of rumors going around that the CalPERS is broke, but that's for another video. So another thing too in the countries and states is the sovereign funds and reserves. So China has about $3 trillion in reserves, which is a lot of money. And sovereign funds are like venture funds, but they're sponsored by the country. So the next thing that makes up institutional investors are large primary financial institutions, i.e. banks, insurance companies, brokerage, and financial services. And they normally have insurance companies, for instance, and banks have a lot of money that they're trying to maximize and get a better return on. So, with that kind of money, you want to make sure that you keep it safe and get as much return as you can. So the next thing is financial asset managers, and they control hedge funds, mutual funds, 401ks, IRAs, private equities, and venture capital, and also et cetera, et cetera. And so private equity and venture capital, between those two, it's just a lot of money, and they're trying to maximize their return, in the best way. Hedge funds and mutual funds as well, and also 401ks and also IRAs. But between private equity and venture capital, that's kind of where the bulk of the money is, and that's kind of where they're trying to maximize that return as much as possible, and also secure that money as much as possible. Also, the next thing is global corporations, and global corporations are companies that have money offshore for tax purposes. For example, Apple. We've heard Apple in the news that has a lot of money offshore, but that money offshore is for tax purposes, and they're trying to earn as much money on that offshore money as possible. So the next topic is private institutions, which are estates, trusts, university endowment funds, foundations. And university endowment funds are huge in America. And so for foundations, those foundations are the Bill Gates Foundation, stuff like that. So next topic is real estate investors. So private investors, traders, spectators. So around the world, it's about 200 million to about 400 million global investors. And those people make up private investors, traders, and spectators. And all this money moves globally. It's fascinating how so much money is trying to find the best return and also protection on that money. It's pretty fascinating. And so in about 2015, I'll give you a quick example. In about 2015, pension funds worldwide were about 40 trillion. Mutual funds worldwide were about 35 trillion. Insurance funds worldwide were about 30 trillion. So sovereign funds, hedge funds, private equity, retirement funds, endowments, foundation, and individual investors total about $80 trillion between all those funds. And so total is about 250 trillion, which is about 12 times the US GDP. So you can, in this big picture, you can see where institutional investors are so important, because it's a lot of money that's looking for investments and safe returns. So that'll be it for the video. Once again, thank you for tuning in. It's always, the first step is always hard, especially when you're learning to invest. But I'm here to help you. I'm here to guide you and help you understand the financial markets and why investing isn't risky if you know what you're doing. So once again, take the time to pat yourself on the back, because when it comes to learning how to invest, a lot of people don't put the time and effort into it. And to see you here in the video, it takes a lot out of you and your time to make sure you get educated and make sure you get somewhere and accomplish your goals. So my name is Dr. Stock, aka the RX Stock Doctor, and this video is pretty much explaining institutional investors and where they get their money and how that money flows and where it goes. So if you enjoyed the video, make sure you leave a like, comment, and subscribe. And thank you so much for tuning in.